Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over options data. And so this is the fifth week of the highly regarded options theses. And so I'm just going to be going over all of the contracts that I've covered in previous videos, unless they left the list last week. And yeah, I've pretty much just been adding to this, so this video might be kind of extensive. There are a few contracts that I'm especially very interested in, but I also wanted to go over some of the successes and the failures of last week. But over the course of the past week, it's really just been successes. So I'm pretty happy with that. And I did catch myself from a failure a couple weeks ago, and that contract expired yesterday on November 29th. So closing the week out after the holiday week. So happy belated Thanksgiving. Hopefully you guys are all having a great time enjoying some Black Friday deals. But yeah, so I'm just going to get into, the spreadsheet here, just go over a few things, and then I'll dive into the data. And so before I get into it, this is, effectively just my trading journal. This is, my personal trading journal, just sharing it with you guys so that this can be used for educational purposes only, just to have fun together, learning about the markets better, learning about options together. And also, of course, none of this is financial advice. And all of these contracts that I'm going over, some of them or most of them will probably be bad trade ideas, and especially, it's going to depend on the entrance and the exit of these positions. So any of them that I go over, most of them could be losers. So do be cautious of that. And then most, if not all, of the contracts will go to zero by the time of expiration. So it is good to recognize that and exercise caution. And of course, anything that I go over in this, any levels that I talk about that I'm interested in, plans change, whether that's because of the market, a world event, something with the company, or, just, funds got moved to something else. Plans change. So take it all with a grain of salt. And then, what's exciting for this week is I now have Unusual Whales. I went in on the annual subscription for their Black Friday sale. I believe it's still going on, but it may not be. But they do tend to have monthly sales, whether it's a holiday or something else. So if you miss the Black Friday sale, wait for the Christmas or holiday sale, whatever, in about a month. And then also, if you guys are interested in specific tickers on here, not interested in the rest, I will be including timestamps so you guys can skip ahead to your favorite tickers. But, all of them, they're all going to build upon each other. I'm probably going to go a little more heavy into some of the nitty-gritty details of how I organize the data with AMC, and then that will just be kind of built upon in the other ones. And I did want to point out that kind of my thesis here, it's outlined here, is basically, I am not doing this to fall in love with stocks or these contracts, and I am not doing it to get greedy. And so my plan is to just establish small positions, buying ideally one contract at a time, with the plan of if I have one contract, I would sell for 80% profit. If I have two, I would sell at a 20% and 80% profit. If I get three contracts, do 20, 80, and 100. And then following that, start to get a little bit more conservative, going 10, 20, 80, 100. 5 contracts, trim at break even just to lower that risk. And then if I get 6 and beyond, then I would start trimming at, multiples of 100% profits. But of course, this can change. So good to take that with a grain of salt as well, because I have actually pulled out of some of these at different levels. I was very happy about it. Others, it could have made more money, but at the same time, nobody ever goes broke taking profits. And so that's kind of the plan here. And my overall goal is to end each week with less than or equal to 20 positions. whether that's these contracts or shares. And so this week I actually closed the week out with 21 positions. So one of my contracts that I hold, I am going to adjust this plan to kind of exit it on Monday. Not that I'm not bullish on it, I just don't want to get, spread too thin. And so some of the contracts that really stand out to me on this list that I added, one is Bed Bath and Beyond, or sorry, not Bed Bath and Beyond. That's BlackBerry, so ticker symbol BB. I added these 4 contracts with a variety of expirations, and I'm really excited about this. I think basically from a technical standpoint, coming from somebody else on X, my analysis of the chart and then looking at the options data just looks really, really good. Maybe these two up here are just very high risk since the expirations are approaching. These two down here, I think that those are going to be some very nice contracts. So I'm excited about those. Another one to note is this GameStop contract that expired yesterday on the 29th. And so that one's leaving the list here. And that is one that I actually made some money on, but that was because I recognized it was a bad trade. Pulled out, not following this because plans do change. And so I think that was a great decision there. Some others that I did add to the list. Let's see, SoFi. I was just looking at the charts last night, thinking SoFi might be a little bit overextended, could continue higher, which is why these expirations are, in June. But I do think that it could be correcting either to $14 or $10 a share. And so I think that those are pretty interesting contracts to be looking at. And then I also added SoundHound, ticker symbol SOUN. I did do a video on that ended up being a really nice trade. I unfortunately did not partake in it though. But yeah, so that is the list for this week. So I am, just going to dive into it going over AMC first. And so this is one that, I had previously traded. You can see the red there. That was my position. And this is the AMC $8 call expiring January 17th of 2025. So that's just a couple months away, less than that now. And so for me, in my comfort zone, managing my emotions and whatnot around these contracts, it's too risky for me. And so, I took some profits here. I kind of organized it a little bit differently before, but so the combination of the 20% and 60% profit there, I made about $15 on it. Nothing crazy, I'm a small fish, but I think that this is still one that's interesting to watch because as we have seen AMC's price going up here, that you can see in green, that underlying price, that's the green line there, and that is based on the closing price. We can also see that the average for this contract has been going up as well, also had some pretty nice spikes. But, will AMC be closing this week at $8 a share or above $8 a share? Really tough to know. I do think that we are building some momentum in it, but for me in managing, my the psychology, the emotions around these contracts, this is a little bit risky, but if it does start to pick up some momentum, maybe the IV dies down, then maybe I'd be interested to do it. But, really for me, it's just too soon. So I'm probably just going to be avoiding this one. Things that we can see that stand out. If we look at the volume, we've had some nice spikes in it, going up to about 6,000 contracts traded on these days. And we've seen premium steadily increasing, the open interest steadily increasing in green there. And so that does look good on these spikes. It has been going up. Looking over here, we can see the total premium in the blue corresponding with this volume traded. And, premium on those days here, it was about 180,000. Over here, it was about, I think I could probably see that over here, around $225,000. So almost $250,000. And we can see that with these spikes in total premium and the volume as open interest is going up, we also see that the IV is going up, so the implied volatility, and ideally it's good to be getting into these positions when IV is low, and I kind of view IV being low when it's less than 100%. When it's above 100% like it is right now, just getting a little bit risky, so maybe better to look at a longer dated call option with AMC. And over the past week, I believe I put out 2 videos, one on AMC or maybe that was last week. I'm trying to update the links here in case you guys want to pause it. You can check them out, but a lot of the YouTube videos are my own videos. All of these should be here. And, I did just do a video on AMC, GameStop, and Plug Power that came out on, I believe that was Thanksgiving. And so, that should be a nice resource for looking at this. But yeah, I mean, for me, this is just a little too close for comfort. And so that is why I have gotten interested in more long-dated contracts like this one over here, which is the $8 call that expires June 20th of 2025. So a lot of wiggle room with this one. And so here we can see that, I have been establishing quite a small position. Let's see, I have about... 4 contracts right now, it looks like, based on, these percentages that I would trim at. And so I didn't, for this one, trim at, 20% or any of those other levels. So I ended up just trimming at 30%, made a little over $15 there. The next level that I would trim at is 80%. So whatever, 1.8 times 53, that would be the next level that I trim at. And then I do have a buy order placed for one contract at 53, my average, just to add to it if it does pull back to there. But, I don't really see that happening. I think this one's a pretty safe bet right now, especially with all this time before expiration. So I'm hoping that these limit sells do get filled. But then looking over here at the average of that premium, has been going up with some nice little spikes. Also the underlying, like I had just showed, is going up here in the green. We can see in this chart here, spike in volume going up to, let's see, I could probably see that in the data in the table, where's volume, that's over here. So that spike in volume went up to, looks like 70, it's behind Ed, so I can scroll up so you can see it there, 762 contracts traded on that day. And with that, we also see a spike in the premium. That was about $63,000. Well, that might seem like a lot of money. It's definitely a lot of money for a small trader like me. That is, if you'll look up the definition of what a YOLO is on Wall Street Bets, it's $10,000. So this is just like 6 degens getting together, sharing some ideas and YOLOing on this. So it's not, a huge signal, but it's also probably because this is a later dated contract. It's not as exciting as the ones that expire sooner. There's just a lot less risk when you've got this much time in it. At least that's how I view it, especially when I think about how I manage my emotions and whatnot around this. And so, yeah, I mean, with the premium being up here, like I said, I don't think it's going to be coming down to 53 cents, but I have that order there just in case. And then also, before I move on to the next contract, we can see that the open interest has been increasing, but then it just kind of flattened out over here. Again, maybe because this is a longer dated contract. And then we can also see that the IV, it's flat here, spiked up, and now it's cooling off a little bit. The IV is, right around 100% here, looking at 105. So it could be a lot higher. It could also be lower. So that's why I personally would want to be patient, wait for a pullback to add, and also because I already have this established at a low average. I don't want to be increasing that average, increasing my risk. So that's kind of my strategy with this one. And then the next one is going to be another AMC call, this one being the $20 strike that expires January 16th of 2026. So this is a leap. Got plenty of time with this one. In this one, I must say, I maybe learned some lessons with it in that I only have one contract. My average is 35 cents. And, I could have been more aggressive buying when it was, right around 35 in this range here. But I just got that one contract, was waiting for it to dip to 30. I guess it didn't fill on the 7th when it did hit a low of 30 cents. So, I could have just been adding to it with, just keeping my average at 35 or right around there. But I didn't do that. That's also, me learning how to manage the risk, having one contract, much less risk than, throwing tons of money into this. So I am learning in a fairly conservative way. It's basically like a level up from paper trading. So I like that as far as AMC goes, as far as all of these contracts go, really. And what we can see in the chart, this is the same data from the previous two graphs. I just have the y-axis adjusted to $20, representing that strike. And we can see that, the price of the underlying stock needs to go up a lot to get up there. So this one's definitely very risky, although, it is, more than a year away before expiration. So I had initially been thinking, oh, well, I'll just hold on to this one, see what happens. But, maybe it doesn't close that week above 20. Maybe it doesn't go up to 20 before then. I do think it will, but maybe it doesn't. And the idea here is, again, to not fall in love, to not be greedy. I need to stick to that plan. That's why I have this 80% mark there, because I do plan on exiting this position when it hits 80% gain. And then we can see, just like the other charts, that premiums come down, gone up with some little spikes there. And we can see also spike in volume, and that represents, let's see, volume of less than 20,000 contracts, premium being 800,000 there. So that is one to, you have to get 80 degens in a room to YOLO on that. So that is, more unusual activity. And then following that, we see open interest. Actually, it's went up following that, but it's kind of, been in this weird zigzaggy pattern. So that's kind of odd, and not in the good way necessarily. But then we also see that IV has been going up a little bit. Again, just like the June contract, this is just over 100%. And so, if this does dip to 35, I'd buy another contract. If it doesn't, and, goes higher, then I secure some gains. And that position was established, let's see, at the beginning of November. So if I can swing this for an 80% profit, not a huge amount of money, but a good percentage, if I'm able to do that in a couple months and stuff, I feel pretty good about that. So yeah, that's that. And then I will also just, because I've got it up here, I'll pull up the chart. I did just do a video on this, but I think it's interesting to note that AMC, as I was talking about in that video, this orange uptrend, it did close below that uptrend. So maybe we do see a retracement down to like 469. And if that is the case, maybe a good opportunity to pick up some of those contracts, especially the longer dated ones. But maybe this is just kind of a little bit of a stall out before it starts to break higher. So yeah, I'm feeling really good about the moves to the upside that we've been seeing with AMC. I think they're healthy. I think they're sustainable. And, I think that these contracts are all going to be printing. And especially, like with the shares, fall in love with it. Contracts, you can't fall in love with them. So, I kind of like that about these. And then so now the next one that I'll be getting into is BlackBerry, so ticker symbol BB. I've got 3 calls here, all with a strike of $3, but with different expirations. And so they're just kind of getting to be more recent to, or sooner expiration, and then longer dated expirations. And so this one's definitely the most risky, about a month, less than a month from now, about 3 weeks from now, the December 20th expiration. And so I personally don't have a position in this yet, but I do have a buy order placed to get one contract at 5 cents. And that really is just like, well, I'll buy that. Maybe I could swing it for 80%. Again, not that exciting, about $4 gain there. But, just to kind of get more comfortable. All of this, it's all about just getting more comfortable with expiration dates. So that's why I'm not just looking at BlackBerry June or, Leap's expirations, because I want to be getting more comfortable with the close dated contracts as well. And so, maybe it could pick up one contract if it pulls back to 5. That was the low the past couple days, past few days, it looks like, but my order was not filled there. And so we can see that the average is around 6 cents. So, maybe that order will get filled starting next week. Maybe not, though. I don't really care. Only risking $5, so not a big deal. And we can see here that the chart is going higher. And I did just do a video on BlackBerry, so I should actually update this. But I am going to... let's see, click on this link so we can see the original motivation for me looking into this. And so that is going to be coming from Mr. Chart Norris. We can see here this weekly candle chart. I did go over it in the video, so I will put up a link for that in just a second. But we can see here, it looks like he has this inverse head and shoulders pattern, and then this moving average right around 3. So that seems pretty reasonable. But yeah, I'm just going to go over to YouTube Studio to copy this link to the, actually this is SoundHound, sorry. I need to look at, yeah, BlackBerry, this is the most recent one. Sorry, I guess I put this out, did I put this out yesterday? Let's see. I'm just gonna add it here and, return there, so that's a link. And that video came out, yesterday on the 29th. So let's see, 11, 29, 24. And then I am just going to copy and paste that into the other BlackBerry tabs here, just so we got all of that information, because I eventually will be making the spreadsheet public, so you guys can kind of access this to follow whether it's my trades or kind of use this as a template. But anyways, looking at this and, going over what we just saw there, maybe I'll pull up the chart over here. I think that it could be getting rejected from this downtrend, but it could also be forming a bull flag and breaking out. So, I am prepared for it to pull back, not putting a lot of money on those short dated contracts, just to kind of have fun with them. But with the longer dated contracts, I could definitely be adding if it does pull back. So I feel pretty excited about that. But this one, let's see, we can see that this spike in volume that went up to or represented about, let's see, $22,500, so a little more than 2 degens YOLOing. So nothing too crazy there. We do see open interest increasing, but with this expiration date looming, this one, I think it's tough to take a lot out from the options data I have here. And so I'm actually going to pull it up in unusual whales, because I think there's a lot of really interesting data here. And so this is that contract, the $3 call expiring in December. And so I have this showing the, let's see, the bid and ask volume, and we can see that this is over the course of 30 days. Each candle represents 1 day. And so what stands out to me, and something that I've noticed, we see the bid and the ask here representing, the bid being a lot of this candle. What I have noticed with the bid and the ask, it's not always sell or buy, so take that with a grain of salt, but just that there was a lot of volume traded there, and that is, considering over the past month, the past 30 days, we haven't seen volume spike that high. So that makes me think that there's something exciting going on, something unusual, even though it's not a whale. Maybe it's an unusual manatee, but, I think that it's still in the whale family or whatever. So I'm kind of intrigued by this. And then these graphs here, it's going to look the same for all BlackBerry contracts. And what we can see, the green is going to be the volume of calls, I believe. We can see that the green line is going up pretty frequently, a lot over here. Whereas the red, the volume of puts, is more or less flat, if not, going down. So that makes me think that this is majority bullish, minority bearish, and that this could be the bottom that we saw. That yellow line is the underlying stock price. So that makes me feel pretty good about it. And I will go over the other contracts in unusual whales here, just like I am doing that with this one, but I am going to switch back to the Excel sheet here so we can, look at the other contracts. So this one, yeah, definitely a little bit risky for me, worth risking $5, but no more than that. And that would again be for, an 80% swing following that table that I have. And then the next contract here, BlackBerry $3 call expiring January 17th. So just giving one more month, of buffer relative to that other contract. And so this one, I did pick up one contract. I have one that I would sell for an 80% profit, bought that at 10 cents. And, I picked that up on Friday. And so I would add to that at 8 cents, get my average down to 9 cents. And then that would again be, swinging for 20% and 80% profit. So again, nothing too crazy. But this could be a pretty nice swing. And looking at the chart here, this should be basically the same as we saw over here with the green, the underlying stock going, up here. But then, with this little dip here, that would have been a nice dip buying opportunity there. It looks like around the 20th of November. Looking at the contract premium, it looks kind of like we got a double top up there, so maybe that's a little bit concerning. But I do think that we also have this, very nice spike in volume, but that is, just over 5,000 contracts. Looks like it's actually 5,587. So that's a pretty a good amount of contracts, but again, it is less. Let's see. It's about 6 degens YOLOing. That's $60,000 right there. So, that is maybe something to pay attention to, but, you can fit 6 degens in a room and you're not crowded. So it's not that unusual, not that crazy. And we do see that the total premium has come down, really just being like low volume days around the holiday and stuff. So that's not terribly surprising. We do see that open interest on this spike, at least, it did go up, but this one here, I guess it was kind of neutral with buys and sells, as we do see the open interest being kind of flat around that. And then the implied volatility, this is actually still pretty low, being less than 100%. Actually, if we look at that last one, again, also less than 100%. This is just a little risky with it being less than a month away now. This one is a little bit more reasonable, so maybe we could start to see this taking off, and it is in kind of the buy zone as far as the implied volatility goes, especially because, the previous week and the week before it was higher, and now, closing the week less than 70%. So I think that's pretty good. And then looking over at the data in unusual whales, looking at the contract that expires, January 17th of 2025. This is again, 30 days, each candle is 1 day, and we can see that we just have, very little volume over here, and then we've just recently started to see that pick up. So that to me, is looking a little bit more spicy, looking a little bit more exciting. So I'm excited about this. Not necessarily this contract because it's short dated, just being a couple months away, less than a couple months away, like a month and a half away. But the other contracts, I think, very, very exciting. So I look forward to going over those, which we will do. So here, the next one on here is again the $3 strike, but this is expiring June 20th. So we got about 7 months before that expires. So I think that is, a pretty safe bet there. And this one, it looks like I just picked up one contract at 35 cents. And then I do have another buy placed at 30 cents. We'll see if that gets filled. It would be great if it would. And actually, this makes me think, just kind of like I had mentioned it with, let's see, the AMC contract that is a leap that expires in January. I only got one of those contracts, and it was at 35 cents. So maybe this, maybe I want to, put a 35-cent order there, just to consider it. And, and I'm actually going to, let's see, I don't have my, let's see, let's get the ribbon back up there. And let's see, yes, I'm going to color that yellow, get that ribbon to go away so you guys have a better view. And that's one that I might consider. Maybe I will add that. Yeah, we'll have to consider that, moving forward. But yeah, so looking at this one, we can see, again, this is the same graph here in orange. We do have some gaps in the data as far as the premium goes, that average value there. You can see some gaps down here. So we see that in the chart. Again, thinking about this, the IV, that's less than 70, so looking pretty good here. We can see that volume, we have had some pretty nice spikes. With these spikes here, we did see an increase in that open interest, so looking good there. But then we saw kind of this pullback, over here, there was some selling, it looks like. And with that selling, the green here, we actually saw, that was people trimming into, the upside moves here. So those were actually some good trades, I would say, lowering that risk. So that makes sense. But then we did see some people, it looks like, buying the rip, I guess, over here. When it was over here, when it was kind of flat there, flat here. And yeah, the open interest has gone up to, let's see, around 1,600 traded on that day, if that's right. Open interest, yeah, 1,690 or 169.0. And yeah, and then here we can see the premium, that spike was around, almost 42,000. So about 4 degens in a room, YOLOing on that. So nothing, too crazy, but that could also just be because it's a long dated contract. Yeah, and then we also see that the IV, it's very low right now. This is actually the lowest that it's been. All this data goes back just for the month of November. But we can see that we closed the week at like an all-time low. So yeah, I mean, I think that this is a contract that I will want to add to more aggressively just because IV is so low. And I just see so many things with the chart, sentiment of others, the data here. It's just looking really good. So I have to say I'm pretty excited about this contract, especially with it having the longer dated expiration, just because I feel more comfortable with that. And then so talking about the contract, let's look over at the data here. So this is that $3 call expiring in June of 2025. And so this again, 30 days, 1 day represents, one candle represents 1 day. We can see not that much volume back here, actually very, very little. But then we've seen a pickup right here. Sorry for that pop-up. I don't know how to make that, go away. But we can see, this spike here. That's just, volume is picking up. So looking really, really good. So yeah, I mean, I'm just excited about BlackBerry. Yeah, believe it or not. And I think that's the company. It's actually like they don't do like the BlackBerry phones anymore. They do more like cybersecurity and related to AI. So this could actually be kind of an AI play. And I think that there could be a resurgence. And if you do look at the video that I just put out on BlackBerry, it's the link here. That I talk about a trend line that goes back to 1999. And yeah, so I think that it looks really good. I'm excited about it. And so the other final BlackBerry contract that I'll be going over is, again, the $3 call. This one expires January 16th of 2026, so definitely a leap. And so what I did, I actually was fairly aggressive with this one. On Friday, it looks like I bought 2 contracts, one at 68 cents, one at 64 cents. So that puts my average at 66 cents, would trim at 20% and 80% profit. I do have another buy here at 60 cents, but, thinking about this, maybe this is another one that's good to be more aggressive on. I do have 2 contracts, but maybe it doesn't go down to 60 cents. So maybe I want to consider adding at 65, just thinking in like 5-cent increments. And that would also still be getting my average down. So not too bad there. So yeah, I mean, this is one again, very excited about. I'm just excited about BlackBerry in the chart. And so here we can see same chart over here. We've got that premium. It's been kind of flat and then bumped up a little bit. And if we actually look at the IV here, it was in the 70s, and then on Friday it dipped down. It's also, a shorter day trading and stuff like that. But, 69 here, 69 here. That was on November 15th. It's behind Ed, but you trust me on that. We can see that, let's see, the IV was lowest. Let's see, the IV, that's in green. Over here, so that would have been November 15th, I believe. Yeah, it pops up as November 15th. And so if we look at the stock price here, that would have been over here, I believe. No. November 15th would have been right here. And, with the IV being lower and the premium has gone up since then, it looks like the average was 53 cents. And it has gone up to, based on this chart, a high of about 68 cents. So that's, a pretty nice move there. Maybe it could be pulling back, but, I'm just feeling good about BlackBerry in general. And so here we can see the volume. We've got this nice spike here that's about 1,200 contracts. However, with that spike in volume, we actually saw a big drop off in the open interest. So that suggests that this volume was a lot of sellers, so not really a good sign there. But then, we can see here that the open interest has gone well above that level, right around, that would be 4,300, right around there. It's now getting close to 4,700. And this drop off that we saw, that would have been on, let's see, between November 13th and 14th. So if I look over here, we actually did see kind of a pullback in the price, actually pretty notable. And so this actually makes me feel really good about this, that it's not just like people chasing the rips, because we see that the stock price did come down there at the bottom here. That is when, the open interest really started to be picking up. And the premium is not like, taken off huge or anything. It's like a range from about 50 to about 70, so pretty reasonable. And then also we see that the total premium traded when we had that spike there, that was around 70,000, so about 7 degens taking the risk off the table from those YOLOs. They, because they want to, YOLO, you only live once, YOLOT. They might be YOLOing again. And so, taking that money off the table to put it back in, as we can see here in the open interest. So that makes sense. And then the IV, again, pulling back. So yeah, I think that this is another one that's appealing to add to more aggressively than just the 2 contracts that I have. And so if we look over at the data here, so this is the BlackBerry $3 call expiring January 16th of 2026. This one actually, it's not as sexy as the other ones more recently, because these spikes in volume that we've seen were in the past, not over the past week. But still, this is a leap. We've got more than a year before it expires. And if, I'm looking for, 80+% swings on it, or really, as I accumulate more contracts, I'd be trimming, less than 80%. So, this is one that, I want to be a little bit more aggressive with. I feel pretty confident in it. So that is, one that I am excited about. So hopefully, the video that I put out, I definitely recommend checking it out, but also just the options data here looks really good. I'm excited about, even though we haven't seen like $1 million trades on it yet. So, I think that this is kind of like the early zone. So I think that's, it's good, to be if early, and then good to be patient and wait. And that's why we want to have, these longer dated expirations. But then the next one on the list is going to be Celsius, ticker symbol CELH. This is a $50 call expiring March 21st. And this is one that I had previously traded, got out of my position over here, taking a 20% gain. So really not that exciting. But then this, I bought back at the price that I had before, 66 cents. and that was actually the low on the day. So that was a very nice trade there. And this one, you might notice I do have the number of 20% there. Why would I not want to trim this at 80%? So the reason why I don't want to trim this at 80% is I have 21 positions now. I'm closing the week, breaking that rule. And so this is one that it's like, okay, well, this is effectively a rinse and repeat. I, would be fine to take another 20% on this, another like $13, just to lower that risk so I'm not spread so thin. And what we can see with this, the two little red lines there, the positions that I've had, I could have made a little bit more money when let's see, I sold this. I sold it, for 20%. I could have made more. Yeah, so maybe actually this is something that maybe I don't like that. Maybe I should do 80%. But I think if I would have done 80% here, let's see, let's see, I'm just going to do a little bit of math. So what's this one times, let's see, 1.8. That would be 119. So 119. What was the high over here? 132. Yeah, so I could have made 80%. Dang it. And then bought back. So that would have been a very nice swing. So yeah, let's actually look at the chart. Let's look at the chart to kind of consider this. This one actually, I think the reason why I would just do 20% is because of the chart, not because of what happened in the past. But we saw this big move up here. This was the 25th, and the 25th, let's see, was the day I could have, trimmed for 80%. It looks like, that was a topping signal, big wick to the upside, closing red candle there below the prior high. And, we've pulled back a good amount since then. And, but then we got this nice little bounce. This looks like an inverted hammer candle, big wick to the top side. That suggests another topping signal like this one. And so that is kind of the reason why I'd be happy to get out at 20%. I don't want to be like revenge trading or just looking at the chart and being like, oh, I could have made 80%. Now I want to make 80%. It's like, no, I made 20%. I'll make 20% again, and then I'll keep my position sizes, my portfolio of whether contracts or shares, down to 20. And so I need to do that. I need to follow that rule. I broke it. But a big part of the reason why I broke it is because the market closed early on Friday and kind of caught me off guard. And had I, had my senses together, I probably would have just sold this for 20% before close. As the limit, as we can see, for 20% is 79 cents. That was the high on Friday. So I would have been good to do that. But considering that I am still holding, I may not trim out at 20%. I would buy back at 60 cents. But looking back here, the last time we were as low as 60 cents was on the 20th. You see that just above Ed's head there. So the 20th of November, 59 cents. But maybe we don't go that low, but also, don't want to fall in love, don't want to be greedy. So I'm not trying to do that here with this one. Let's see. I can pull up this. This is something that I posted over the past week. This is, from Mr. Chart Norris saying that Celsius had a breakout and retest. And, I just, posted that saying sick. I closed my position early, hit the percentage gain I was happy with, and was hoping for a retest like this. I'm tracking Celsius $50 calls, as you guys know, that expire in March, which I cover weekly, just, kind of doing an advertisement for this. And so, yeah, I posted that. And so, yeah, Mr. Chart Norris, I definitely recommend following him. He posts a lot of really nice charts and is very calm and, patient about stuff. Some people get a little too excited, and I think that can be not so good, especially when dealing with options, which I don't know that he does, but, that's what I've been enjoying trading. Anyways, enough of a ramble there. We can see this spike in volume. This is going up to nearly 1,000 contracts. Looks like 971, which represents a total premium of around $160,000. So, that's not a blue whale, but maybe that's a minke whale, that's getting into the bigger whales. It's not a manatee. That is something to be paying attention to. And following that spike, we see that there was a jump in the open interest. But we actually see a decline in the implied volatility. So right around here, that would have been, let's see, November 6th. This, would have been a great time to be accumulating whether shares or contracts. And so, yeah, I think that looking at the chart, that there's a potential topping signal. I think that, I want to take a 20% profit, and then maybe I would then buy back at 66 cents again, just rinse and repeat. That's kind of why I found with options, 20% seems to work well, because then it can be done with the rinse and repeat. But why I like 80% first is because maybe it goes up to 80% and I don't want to FOMO in or get kind of anxious watching it go up higher than where I exited. And, so this is kind of, an example of that rinse and repeat, although I could have done it with 80%, but, you live and you learn. And so, yeah, there's the contract there. And, maybe it's good to get in the habit of going over the stuff over here. So what do I see in the contract here? I actually don't see anything. Nothing really stands out as too crazy with the contracts, calls, puts, all of them. The volume here, it looks like, it's just the little signal around that zero line, whether it's calls or puts. Price has gone down. We did see a little bit of a spike in call volume here, but it's nothing too crazy. This is going back 30 days again. 30 days over here. We actually see this spike here, and I believe that was when, we saw kind of the drop here with... let's see, that was the IV. So yeah, this is, if I've seen the green line dropping, maybe I want to have total premium and volume, total premium and open interest, because then because maybe that's a better way to think about this, and then volume and implied volatility. But anyways, this is how I have it. So this is probably how I'm going to leave it. But maybe that's something that I want to consider. But yeah, we just see this open interest increasing. So yeah, I can't remember if I said there were sells associated with the spike because the IV dropped. No, there was an increase in open interest, so those were buys. So this represents, accumulation even as the underlying, that's the average fill was going down, and there wasn't a huge offload of contracts down here at a loss, or maybe there were over the course of these days, but I don't really think so. I think that this is looking good, as I've mentioned, but it could be pulling back, as I had mentioned over here, with this being potentially an inverted hammer to be pulling back. And then I did add another contract here just because the March 21st, that's a little bit sooner than I would like. So I did add the $50 call that expires June of 2025. So the monthly contracts there, or, quarterly or halfly, part of the year, whatever, halfly, I don't know what, but so for this one, I don't have any orders filled. I do have an order placed to get one contract at $1.10. But as we can see, the premium is notably higher than that. If we look over here, it's above, $1.50. And so coming back to $1.10, the last time we were at $1.10 was on the 19th. So I don't necessarily expect this one to be getting filled, but that's fine because I have this other contract. But what we can see, the underlying price in green, this is putting in like a lower high, just like I showed in the chart. So maybe that is like suggesting that this could be pulling back a little bit more. There could be some greater discounts. So I think it's good to be looking and be patient, waiting for those. This one also, very similar to the other contract that I have over here, but this one actually has a more recent buy. If I see the axes here, October 25th there, October 25th here, so they are consistent. And what we can see is multiple spikes, and this one actually representing more premium, so about 60,000. This one, about 50,000. Looking at the March contracts again, this one, this spike though, that is 160,000. So that is, like I think I said, minke whale. Whereas this one over here, these are just manatees. These are just retail degens, YOLOing, whatever what you want to say. 6 of them in a room, 5 of them in a room here, and so, or maybe I should say, maybe I shouldn't use the analogy of in a room together. Maybe it's munching on the seagrass together. So nothing too crazy there. But we can see, let's see, the IV did dip down over here. The IV still, it's above 70, but it's below 80. Over here, again, same type of thing. So let's actually look at the unusual whales data from this. And this is, so again, the $50 call, June 20 expiration for Celsius. And again, back here, if I switch between these, we could see actually this spike was earlier for the March calls, but for the June calls a little bit later. And this actually looks like, I would say, a smarter money move, because you see this big spike that corresponds with, if we look over here, this more recent spike corresponds with an increase in open interest. Both of those spikes correspond with an increase in open interest. So there were buys here, majority buys. And we see the average fill, that premium in yellow there, going up following that big buy. Whereas with the March contracts, we actually see, these big orders, and then we see that average fill going down afterwards. They didn't buy the exact bottom, but that's also suggesting that, they think that this is going to be going up relative to where they bought, just around, $1.50. Whereas this one, they think it's going up from where they bought around, whatever that is. Let's see, that was the average fill $1.26. That would actually be higher than where my limit order is. So maybe I'd want to consider adjusting this to 126. So I'm just going to note that here with some yellow, so I know to check it out. Okay, and I don't think I have too much more to add to the stuff on Celsius. I personally would just rather be holding this call, this contract, than the other one, just because it does give me, March, April, May, June, 3 extra months. So feel a little bit more comfortable with that one. And so now the next one on here, this is one that I actually closed out my position on following my plan over here, actually deviating from it a little bit initially. But so this is the FSLY, ticker symbol FSLY, $10 calls that do expire June 20th. So, definitely got out of these earlier than I needed to, but, my risk is now 0. I've made money with this one. And so we can see that, it's buying up here. Price in the stock actually came down, and now premium is higher. And so let's see, I'll go over what I did in a minute. I'm just going to talk about, the charts, the data up here first. And so what we can see, volume, big spike here, and that represents about 12,000. Again, that's manatee munching on the seagrass. That's 12,000, so that's like one degen. We have the open interest steadily increasing even after these spikes. It's continuing to go higher. Then we have the implied volatility was low over here around the 14th when price was low. So that, is pretty good. And so I think that was really like the time to be accumulating, but I was trimming out of my position following that. And so, you might notice here that I did trim at break even. I lost 14 cents on that, not a big deal. But, I lowered my risk with that. So I think that's good. I think I probably could have, made more with this, but that's how it always goes. So I don't feel bad about that. Then I trimmed at 10, 20, 80%. And is there 100%? And there is 100%. So I've made, more than nearly, let's see, actually I can just add this up. Let's see, how much money did I make from this? And the numbers are odd because over $165, so that's pretty good. The numbers are a bit odd just because of fees and whatnot. So yeah, I'm happy with that, and I probably could have held for longer to make more, but I've got lower risk. And so this is probably one I'm just going to continue to track, but not trade. But one thing that I think is really nice is that, the maximum sell that I had was at $1.24. That was on the 25th, and we can see that the high for that day was $1.29, so I sold just below it, and then following that, we did pull back. And so if my average was 62 cents, let's see, I'd want this to go up to around 190 in order to, be doing the X, times, 2 times 100% gain. And so we haven't hit that yet. So far, the high has been $1.33, and maybe I could have just waited for that. But at the same time, I've taken the profits. I've walked. I feel good about that. If this pulls back, I'll be tracking it. And then maybe I could think about reestablishing a position. But kind of the reason why I'm happy with this play is because it didn't play out exactly as I had drawn on the chart over here. So, I drew this during a live stream, Ticker Request Live, Sundays at 9 p.m. Eastern. I drew this cup and handle with a nice double bottom there. And we got this really nice move. I'm expecting it to go up to around $10 a share. Which does correspond with that strike, so it makes a lot of sense there. But we did get this big move up here, hitting a high of $8.76 on November 7th. And then it pulled back, got me thinking, maybe I'm wrong, but at the same time, I'm just going to add a little bit more down here, especially because from this retracement, it looks like that pulled back to, it looks like this 786 here. I think it's kind of covered up by this purple line. Actually, why do I have that purple line there? I think that was just a level that I was kind of keeping an eye on. Oh, no. Actually, I'll leave that purple line there because the 786 is this white line going across there at 621. And we hit a low over here of 625. So yeah, just above that level. And so I think whenever, charting stuff, you always want to kind of round because, I was looking at this. Well, it hasn't hit 621, but, maybe 625 is the low. I added, let's see, the 18th and 19th. So let's look here. The 18th and 19th, I actually didn't add, but I didn't panic. I could have added more. Dang it. I would have been able to get my average down on these 3 days. But, I just held tight. It didn't follow, my exact expectation because it broke below this handle. But that was a dip buying opportunity, and it has since taken off. And so I still think that this could be going up to around $10 a share based on that measured move there. But maybe it doesn't. So if it doesn't, I've taken that risk off the table. Although, on Friday, short trading day went up over 7%, closed at, a new high here, breaking above that high. So, I think this is just looking really good. But, into that strength, I'm glad I took profits as I am learning with the options. And part of that is managing risk, which is why I trimmed between 0 and 20%. But I did, get this one at 40%, which was, not really following the plan earlier. And I trimmed up to, 100%. So I feel good about it. Made over $165 with it. So this is a successful trade in my book. And then just looking over at the data here, we can see that, there has been more activity with this contract. It may also just be a little bit newer, but yeah, basically no volume back here towards the end of October, beginning of November. And then that really started to pick up around here. With this day, we see the volume on, for that day, because it's a daily candle. Let's see, the daily volume 182. and that was on the 21st. So if we look over at the volume over here, was that the 21st? Oh yeah, candle volume 166. Candle volume 166, and it is for the day. That's the 21st. And what do I have over here? 166. So that is, spot on there. Makes sense. But yeah, this one could definitely still be good for holding on. But for me, where could this maybe be pulling back to? Let's just look at the chart over here. We got this move. I could see it coming down to 8 before going higher. But yeah, it's just, once I think this is kind of like the dangerous thing with contracts is that, you fall in love with making the money and then you want to buy back. Eventually, it's good to just kind of walk away. So for me, there isn't anything telling me that this is going to necessarily pull back looking at the data here. But if it does pull back, if I see that in the data, then maybe I would consider rebuying. But at this point, it's just chasing. So I am just going to chill. Followed my plan over here and I made $165. So I feel good about that. So this next one is going to be the FuboTV, ticker symbol FUBO, $2 call. This one expires May 16th of 2025. This one I do have a position in. It looks like I have 3 contracts that I would be trimming at 20, 80, and 100% profits. And I do have a buy order placed for one contract at 20 cents. This is one that, I could probably be a little bit more aggressive with because my average is 30 cents. We did hit a high of that, when I wasn't buying, when we were getting these lows below 30 cents. So, I could have definitely been more aggressive with this, but at the same time, I did have this order placed at 20 cents. It wasn't filled on these days, or, we hit the lows of 21 cents, not 20. So I wasn't able to add to that, but that is just keeping my risk to a minimum. Only got $90 on this with my average at 30 cents. And then looking at the data here, we can see that the underlying and the premium do follow each other pretty well. My red position average has just been kind of boring up there. We can see that we have had these spikes in volume, and with those spikes in volume, we see an increase in open interest. So looking good there. And those spikes in volume correspond with up to about $25,000. So again, not super huge, but maybe that's because the expiration is, about 6 months into the future. So, take it with a grain of salt, I guess. I don't know if that's the appropriate way to say that because I kind of forgot what I just said. But, yeah, let's look over at the chart and then look over at the unusual whales data. So, FuboTV, this is one that, it was put on my radar because of Mr. Chart Norris. It does look like there's this downtrending level. I feel like we could be coming up to around 186, if not getting up to beyond $2 a share. Hence that strike that I have for those calls. But this one, yeah, it's just been kind of like a dud, been kind of boring. Maybe we're starting to see it pick up, especially with, over 7% volume on like half a day trading on Friday following Thanksgiving. So maybe this is starting to look pretty good. But again, this downtrend, that would be, price coming to around 170. So about 10 cents, maybe bumping into some resistance there before breaking out to this level at 186. And then getting up to, around above really $2 a share to test these prior highs here. And yeah, so I have been a little bit worried, I guess, that this breaks down here below this low, but we haven't really seen that. We've actually seen, let's see if I zoom in, we have seen higher lows be put in here. So this looks pretty good. I probably should have been more aggressive with it. And so maybe what I should do is consider placing a buy at 25 cents, which would have been filled on, that would have been Wednesday, but not been filled on Saturday. So anyways, I'm just going to make that yellow so I know to consider that. And yeah, we see that the implied volatility, it was below 100, although not on Wednesday. So, maybe this is starting to get to taken off, and maybe I see it, maybe we see it on Monday go up to 36 cents. That's 20% for me. So, I'd be happy with that. But then let's look over at the data here. So for FUBO, over the past month, we have seen some pretty notable spikes in volume also more recently. So this would have been, I guess, on Wednesday. And that is while the premium has been low. So we could really start to see this taken off, getting some big moves. If we look at the data over here, it doesn't really stand out. Nothing really stands out to me as being too crazy because the calls and the puts are right around zero. However, back here, we had some more volume traded on the calls and puts, but nothing too much recently. But maybe we start to see that moving into, December. And so, yeah, I mean, that's all that I've got for FUBO. And so now I will switch over to some GameStop calls. I got 3 of them to go over. The first one being this one, which was the $40 call that expired on November 29th. And so this one was pretty risky. And you might notice that I did have a small position, 1 contract. Actually, I ended up having more than 1 contract in the end, but that was just to get my average down to kind of exit because I kind of started to sweat thinking about, oh, well, at this time, not this past week, but the week before, I started to realize like, oh, well, next week is a holiday week with Thanksgiving. We're going to have a shortened day on Friday. There's probably not going to be tons of volume traded. And so, and I don't know that this is going to go up to 40 because at that time, we hadn't even crossed 30. So I was like, well, crap, this is probably going to be a contract that goes to 0. And I should get out of it. And so I had one, I placed this towards the end of the day that was the 20th, thinking, because I think what I saw, the bid price or the ask price, whatever, was around 60 cents. So it's like, oh, well, I'll place it, buy at 59, thinking it's not going to get filled. It did get filled. And so I picked up 1 contract there at 59 cents. And then the following morning, it's like, okay, well, maybe the bottom's in, maybe it's going to rally. So I'll pick up another contract now at 55 cents. And then it dropped to right around 40 cents. And I'm just thinking, oh, crap, this is probably going to be one that goes to 0. So I added another contract at, 40 cents. And so I had my, net position at 59 plus 55 plus 40 minus, times 3 or divided by 3. So I think that would have put my average at about 52 cents. And so I exited at 52 cents. Or no, I think it would have been my position would have been 51 cents as marked here. So that's the average from those 3 contracts. And then I sold at 52 cents. What was the high that day? 62 cents. So I could have made some more money. But then what were the highs the following days? All of them below 51 cents, going lower. So, while I could have made more money on that day, I got out and actually made a small amount of money. So I'm very happy with this, and this actually kind of inspired me to, oh, well, maybe I should look at some other GameStop contracts that are dated a little bit later, so I can consider those. And so, yeah, I mean, you could see, I basically bought and sold right along that line there. Very happy to get out and not, hold it to going down to 0. And so with it going down to 0, we can see that, volume did increase pretty high. And following that, this is, again, I guess, people kind of YOLOing into this thinking, oh, yeah, it's going to go to the moon. But, when people were YOLOing, when there was this volume on the 26th, let's look at what the implied volatility was. Over 200%, that's too high. So, not a good time, especially with short-dated contracts, to be, throwing money at them, especially, when the stock price was starting to level off up there. And following that pullback in volume, we see the open interest kind of flatten out. So people lost money on this, a good amount of people. So not so great, 20,000 contracts. Let's see, well, I should be open interest. 18,567 contracts either going to 0 or maybe they rolled those into another position. But I don't think that, I think that would have showed up as them selling if they were rolling. So, 18 over 18,000 contracts going to zero. So this is risky stuff. Over here, we can see that the premium that was traded on this spike was 600,000. And let's see, 600,000 right here. And we actually saw the open interest increasing. And so this is people YOLOing, big, 60 degens. This is a herd of manatees, munching on the grass, the seagrass, and they all, ate, harmful algal blooms. They all died. So don't be one of those manatees. Look at the data, make decisions based on the data, because if we look at the implied volatility, this is something from tracking these contracts. I've learned that implied volatility skyrockets at the end because it would have to go up. I believe my understanding is it would have to go up 4,608% to go from basically zero up to getting into the money here. And so, yeah, this was a dud. So don't like, for me at least, I don't like to trade stuff that's so short dated. And I'm glad I recognized that and exited. And that was a great lesson for me. This is all about learning and having fun. And so I did that with this. I made a little bit of money, so that was great. And then just looking over at the contract here, this, lots of volume leading up to that expiration, and it went down to zero. So people lost money on this. Lots of call action, no puts. You see the red line there. Lots of call action. This is for all of the GameStop contracts, so not just this one. But yeah, people were losing money on this. And also, I should throw up the chart because I think this is really cool. I did go over it in the recent video. I was talking about this orange uptrend that we consolidated below it. And I said in the video, don't be surprised if we do pull back to that line. What do we do on Friday? Dropped almost 6% on the day, retesting that uptrend. So maybe we find some support there. Maybe this continues higher. But I did add, because for me, I have a small GameStop position, no calls or anything right now, but, kind of wanted to be adding on pullbacks. And for me, for my risk profile, I've been trimming as it goes up. I don't have a huge position and I don't trim a lot. But, I just do that in like 10% increments as it goes up. I actually had a limit sell at 32.13, but I did not trim out of that. It would have been 2 shares, I believe, because the high was 23.12 on the 26th. So that's fine. But then I had a buy order at 25. And I was thinking, well, maybe it doesn't come down to 25. So I just did this retracement here thinking, well, maybe it doesn't come down to 25. My average is, I believe, lower than Warren Kitty's actually here at 23.41. And so I don't really want to be adding at 25 to be increasing my average. But, overall, I'm bullish on the chart. I'm bullish on the stock, in the community, the company. And so, I would like to be adding rather than trimming, but I want to be adding on pullbacks, trimming, at tops. Almost got that one perfect, but that was really just based on my average, so pretty arbitrary. And so rather than adding at 25, I upped that to 27, being the 382 here. Also this consolidation over here, I could see that. And so I'd add at shares at 27 cents, or a share, I should say. I'm a small fish. But yeah, this one was a dud. And so I will skip over to the next one. This is the $50 call for GameStop expiring June 20th. So, I like that date. And what we can see with this is the underlying in green. The stock price has been going up, but we've seen a little bit of a cool off. And we've also seen the average premium increasing, a little bit of a cool off. We see volume here. I don't know why. That's because this should not be the date. This should be a format of, oh yeah. I pasted this in the wrong spot. So there we go. Okay. I've got the dates updated there. Put it in the wrong spot though. And so we can see that the open interest has been increasing, although we did see a decrease in some of that open interest around the spike here, but it, more or less is just kind of flat. So if we look at just the numbers here, open interest, this is not the correct format. So I like to have it, red so it stands out. So I'm just going to adjust that. So formatting only, and then I will make this, dang it, let's see, get that ribbon up there, and I'm going to make those light gray and get this ribbon to go away again. Okay, so, that stands out as being negative that day. So, yeah, I mean, more or less it's been flat. There's actually been an increase. This 30 and that 29, they kind of balance. We got an increase of about 22 there. So, not looking so bad. But, maybe we're starting to see a cool off volume. Also, the total premium here, I'm jumping around here too much. A total premium over 120,000. So, that's 12 degen manatees YOLOing on the seagrass. But, maybe, I don't know how big herds of manatees get. So maybe that's getting into some bigger money there rather than bigger herds. And yeah, seeing a pullback in the total premium. And, just thinking about this, the thing that actually stands out, the IV and that green there, it's above 100%. So this, while I think that GameStop could be going up to 50, definitely before June 20th, I think that the IV could cool off a little bit. And also for me, for contracts, I don't really like to get into, the $200 per contract. So it's like $2. And so here, the low for the contracts is around 576. So this is one I would want to wait for it to kind of cool off a little bit before getting into a position. And that's why, I have shares, just because the contracts are so expensive. And if we do scroll down here, when, IV was lowest at 109, the premium here was not that bad. And so if it did come down to like 300, maybe I'd consider getting a contract. But for me personally, if it did come down to $3, I would not be able to get like multiple contracts because it's just too expensive for me. But, from that, when IV was low, or over here, when it was low, more than a 2x. So pretty nice there. And then I'll just look over at the data for this one, $50 call expiring June 20th. We can see that, as the average fill's going up, that premium's going up in yellow there, we do have more volume. So it would be nice to see it more volume, buying, as it dips, pushing that higher. And so, yeah, I mean, I think that we could see a pullback, and just looking at like the premium chart, just thinking about this kind of technically, if we, where the cursor is, that is right around, the peak over here. That average fill was like 570. So maybe we see a pullback to around 570. And if we do consider that, we do have, the low on Friday of 576. So that kind of makes sense. If I had more on the side, I would consider getting one of these at, 570. But I'm just going to chill. I'm just going to watch, see what happens. But yeah, thinking about the $50 strike, why would I be thinking it'd go up to 50? And it's because we got this gap up here. And also, with us getting above the high here from, let's see, that was July 17th. That was a high of right around $30 of $29.79. With us being, well, below that now, we did hit higher highs, and we are, retesting this as support. And so I don't really see that there's too much in the way from current price up to $50 to fill that gap at $48.75. And then, it really could start to pick up, especially if Roaring Kitty, posts some tweets, updates his YOLO, whatever. I think that we could really start to see some momentum, especially with, it looks like earnings are coming up on December 10th. So not this coming week, but the week after. So things could really start to get a little bit more spicy with GameStop. But before I skip on to the next one, I do have one more GameStop contract. This is the $80 call that expires June 20th. And so this is probably going to be a little bit more in my price range. I'll go over why $80 stands out to me in just a second. But there's really not that much traded on this, as we do have gaps in the average fills. The volume over here, maximum 350 contracts, which represents a premium of, 140,000. So it's not nothing we do have that IV being, right around 140. So it is pretty elevated there. But we do also see with this spike in volume that the open interest has gone up. So this could be one that is pretty exciting to swing. And so thinking about this, like the other one that I was just looking at, the $50 strike, that one had a low of, on Friday of let's see, 576. And so the low for this contract, the $80 call, that's a low of 380. So much more reasonable price to be picking up some contracts. And yeah, so let's look over at the chart first so I can just show why, I think 80. And so the reason I think I actually have to switch over to the 4-hour time frame so we get that pre-market stuff on there. And so when we had that big move up in May, the pre-market high was actually $80.70. And so that's why 80 makes sense to me. And then maybe we go beyond that, go up to 100, get into the triple digits. I could see that happening. So 80 seems pretty reasonable to me. And yeah, so I could definitely see that. But, I like to look at this on the daily. And so I'm just going to keep that over here. So when we're looking at the other charts, and yeah, just looking at this, is there anything else I need to say about this? No, I mean, I might want to put something in yellow here for me to consider buying. Excuse me, but first, let's look at the data here. $80 call, June 20th. We see this big spike in volume. Candle volume, 361. And so, again, not too huge, not too crazy. Looks like the majority was on the bid side. However, it's not always, bid doesn't necessarily mean sell. The way we will see that is looking at the data here that I compile into the spreadsheets. If we see that open interest increasing, and following that day, let's see, that was the 25th. If I scroll down here, just so looking at, the data here, the 25th to the 26th, when we had that spike in volume, majority of it was on the bid side. If you see in the top left of that box there, the bid was 278 contracts. The ask was 73. That would make me think majority is being sold. But then if we look at the open interest data down here, we can see that between the 25th and the 26th, open interest went up by 336 contracts. So, that was majority buying. So that's actually looking really good. And then let's see, where could this be pulling back to? I mean, this, to be honest, I want to get one at 380, but I don't have that amount on the side right now or anything. And so, we got 355 here. Maybe it could come down to 350. And so maybe that I don't have enough on the side right now for that, to be honest, to be completely straight with you guys. But it's something that, I want to be paying attention to. When it's green, it means I've got the order placed. When it's yellow, it means I need to seriously consider it, because I think this is one that could go from, an 80% swing in one contract like that, which is, following my table. That's a really good swing. So, hundreds of dollars, not just $100. So that's one that, I am interested in for myself to consider. I don't have an order placed yet. But yeah, let's, kind of see the IV die down a little bit. But with this expiring in June, I think that the moves are going to continue to go higher for GameStop. So I'm bullish. I'm excited. And so the next one on the list here is going to be Hycroft Mining. This is ticker symbol HYMC. This is a $3 call expiring May 16th of 2025. And so this is one that I do hold. It looks like I've got 5 contracts with an average of 59 cents. While the premium has been low, even looking at the highs, we only had one day these past few weeks where the premium was above my average. So I could have been, getting my average down pretty aggressively. I did have this limit order placed on these 2 days, just didn't fill. So that kind of sucks, because it would be nice to be getting my average down. But at the same time, I'm kind of on the fence. I don't really know how I feel about this one. Although we did see, in the underlying stock price for closing price, we do have lower lows here. whereas we have a higher low here. And so that could be a very good sign. So maybe I'd actually want to consider doing 45 cents on this. I've got to bring that ribbon back down. Consider that, but I only have the order placed to pick up one more at 40 cents, which unfortunately hasn't filled. Yeah, so you can see my average there right around 59 cents as I was accumulating over here. And yeah, I'm wondering if this is going to be taken off. What we can see in the volume, we have had these spikes. Corresponding with those spikes, we have seen open interest increasing. However, over here, we actually saw it drop. So that doesn't look so good. But if we look at the amount of money behind these spikes, it's not even at one degen manatee YOLOing. This, what would be smaller than a manatee? A manatee, maybe, I don't know, but a dolphin is, probably weighs less, but, so this is probably fish. Maybe this is sea turtles. I like that, sea turtles, or sea monkeys. Ed likes that. Yeah, and with this, we could see that the implied volatility around 100. So, maybe 45 is, not, to be a good idea. But let's look over at the chart, Hycroft mining, to see what I think about this. Yeah, we have been putting in higher lows here, and this is a higher low, steeper. I just feel like, I was expecting it to be breaking above this uptrend, and now that's just really notable resistance. We're also below this downtrend now. So yeah, maybe I don't like the 45 cent buy, but it's just one to consider. I don't have anything placed there. I suspect I will not place it there. I suspect I'm more likely to place the buy for the GameStop call rather than the Hycroft call here, just so you know, as far as my feelings about these are. I think this one's a little bit more speculative, especially, I have 5 times 59. I've got, whatever that is, about $300 on the table with this. That's, kind of pricey for the risk. And let's see, going over to the data here, Hycroft, $3 call expiring May 16th of 2025. We actually, see that premium coming down. We do see some spikes in volume. And looking at the table down here that I do have in Excel, we can see that, let's see, that we have seen, as far as the changes, we've actually seen kind of a net decline in the open interest. So this was, at the high 214. Now we're at 194. So this is not, looking too excellent. So, yeah, not the best one. And if we do look at the data over here for the net premium, we can see that, as the underlying, the stock price, I believe, has come down, bounced, come down again, but putting in a higher low there. Actually, I'll scroll that up a little bit so you can see it better. Higher low there. We have seen, more calls up here. People, looks like chasing up here. This is, going to be a very retail heavy stock, so it's not too surprising as AMC does own a portion of Hycroft. And then we've seen, puts here. Maybe those were good if they got out. But that's actually selling puts, so I guess people taking profits from there. But yeah, the premium here has been just kind of flat for both calls and puts lately, so nothing too exciting there. And yeah, so this one, maybe 45 cent buy, but, I'm feeling probably better about the 40 cent. And this would then be, again, not so exciting. I would then be trimming at break even and then going up to 10, 20, 80, and 100. And so if I do trim at break even, then, adding at 45 would be more appealing. The high on Friday was 47, so not close enough to 59. But I could have trimmed, well back here. On the 15th, well back. I don't know if that's a thing. But yeah, at 60. So could have done that, but didn't. And that's maybe why, I started to think about trimming at break even just to lower that risk so I can buy more aggressively if things do pull back. Bump the mic there, so hopefully you didn't hear that or if it wasn't too loud. Okay, and then so the next one on the list is going to be Luminar. So I'm going over a call and a put. Unfortunately, these are so new because this is following the reverse split. there's not much data to be going over here. And so what we can see with the Luminar, that's ticker symbol LAZR, $15 call that expires May 16th. We can see that the underlying stock price has been coming lower, and we just don't have enough data. We only have one data point that's not even going to be up here. Let's see. Yeah, I don't know. Can I click on this? We can see where that is. Nope. But yeah, that would have been average 78 cents for that premium. So that would be up here, and haven't seen much action following that. It looks like there are 2 contracts that are currently open with this. Somebody put $155 on the line for it, and that has since I would say it has gone down, even though there hasn't been any contracts traded, so we can't really see that it's gone down. I think that's probably gone down. Volume, again, maximum 2, open interest flat at 2. We see that the implied volatility is around 100, so I'd like to see that coming down a little bit more. So I don't think that the bottom is in just yet with Luminar. And let's look over at the chart before I switch over to the put, which is really based on the video that I put out a couple of weeks ago on Luminar following the reverse split. And, I did this Fibonacci retracement. The 1618 is down there at 611. So the $6 put, which is the one I will be going over, is, kind of based on that. And, I think that this could be going lower, as it does look like we've had these big moves to the downside and then consolidation. That makes me think this is likely a bear flag and that we will perhaps be going down to $6 a share. But there is this gap up here at $14.70, right around $15. And so that is why, I have this call here, which we can look at the data in unusual whales for it. But, there's nothing there. It's just somebody bought two calls. This isn't even chasing the minnows. It's just one minnow. So, or tadpole, I don't know how we want to classify that kind of trade. But if we look over at the puts, the $6 puts for Luminar, even less exciting, unfortunately. No contracts traded. It looks like as the prices come down, implied volatility has come down a little bit, but it's still over 100%. And if we look at the data for that put, we can see that there's nothing there. And then if we look at Luminar in general, we haven't really seen too much action regarding the calls and puts premium, and we do see this spike in the underlying, and that is because of that reverse split. So take that with a grain of salt. Maybe we won't really be able to take too much of this into consideration until after a month has passed, and looking at this on the 30-day, I'll just get in the bigger picture to see if there's how that's going relative to over the past 30 days. It's kind of not that useful right now, including that prior data prior to that reverse split. So yeah, nothing too exciting there. So I will continue on to the next one, which I'm actually going to scroll over here so we can see all those other tickers. And so the next one is going to be Mara. This is the Marathon Digital Bitcoin miner. This is a $35 call expiring March 21st. This is one I initially started covering, I believe, on November 8th, thanks to Tilray Tapan, who is Volatility on X. And so his post here, so let's see, November 8th, if we go back, we scroll to November 8th, just above Ed's head there, we can see that the high for that day was $1.62. Even if you went with the high from the following day, 430, in the green right now, even with the low from Friday. So very, very nice. He's somebody that I recommend checking out, following on X. Does a lot of really nice analysis. So good to consider following him. And so for me, I hold Bitcoin. I also hold Doge as well as some Ethereum Classic and a couple other altcoins. And so, I'm bullish on crypto in general, but this was just like a little bit too pricey of a contract for me to be getting involved with. But I just kind of wanted to track it to see if, even though it was pricey, and also just to kind of evaluate his analysis, spot on, as we can see from, the 8th, which would have been, right around here. The price of the shares in the green there, the underlying stock, has gone up. Even though there was a dip, there's a dip buying opportunity. And then, from here, dip buying opportunity in that premium as well, which has gone up considerably. Looking over at the volume, we see some pretty nice spikes here. The second spike actually being bigger regarding premium, but all of these spikes, this spike over here, smaller than this one regarding the premium. That's $2 million, $3.5 million. So this is some whale action going on. And we can also see that the IV, though, that is, getting close to, pulled back a little bit, but right around 140%. So I think, the entrance was in the past. I think that, whether it's time to trim now or to just hold for longer, these expire in March. So it's not June. A little bit riskier in that sense. But let's look over at the chart first before getting into the unusual whales data. This is a little doodle that I drew. I was pretty correct about it, but I didn't expect it to go up so high, break below, and then but I mean, just looking at the daily, we have a big wick to the top side. This could actually makes me think that maybe Bitcoin starts to have a little bit of a correction. And so maybe with these contracts, maybe there is going to be a dip buying opportunity. Maybe we pull back to find this uptrend and support, maybe around $20 to $22, with the share price being right around 27.5, having hit a high on Friday of 30.28. Excuse me. So good to, be cautious about that, considering it. And, if got multiple contracts, good to maybe take some risk off the table. At least that's how I like to do it. Oh, and then one thing, I was just thinking about this, looking at the chart, maybe I could draw a parallel channel here. And so I'm just going to do this based on, I guess, the lows over here. So 1531, and let's see the low there, and then just drag that up to the high here. Parallel channel. So, I could see this, coming down to actually 23. So I might actually put an alert on here for myself. I will do that below 23. I don't know why I had one at 16. Oh, actually, I might actually leave the 16 up there because I did swing, I believe, just one share, so nothing too crazy. I did swing one share from there. So that was pretty nice. And so, alerts work well for this. And so this could be pulling back to, it could be going lower than 23. Like I said, 20 to 22. Maybe that happens soon, or maybe it consolidates up here and then breaks out. But, there is that parallel channel there. And, it does correspond with this stuff over here too. So, maybe that is something to be paying attention to. But anyways, I am going to switch over to looking at the contract data here from Unusual Whales. And we can see that as premium has been going up, it looks like we've seen some pretty massive orders in the volume there. And we do see, majority calls over here, not so much premiums, especially, as the underlying stock price has been going higher. Calls have been going higher as well. But, we might be seeing a top considering this big wick here, that parallel channel. And maybe I want to do a retrace from here to here, just being kind of rough. I would think that, maybe I just want to do, let's see, the golden pockets. That's a 618 to the 65%, or the 786. And so, that lines up both of those. That range, the golden pocket from around 22 to 2250, and then also 2250 2050 right around there corresponds with that purple uptrend. So those are some levels that I think be good to potentially be dip buying on, because I think that we might be getting ready for it. But anyways, I'll switch over to the next one, and that is going to be Moderna, ticker symbol MRNA. This is a $60 call expiring April 17th. And so this is one that, I was expecting it to be trading in this downtrending channel, the stock price, and there to be a dip buying opportunity. I do have an alert corresponding to that. I'll show you in the chart in just a minute. But I started tracking this around here when it was making lows for these contracts, as well as the underlying stock price. It's gone higher, so I'm glad I didn't establish a position, but I just wanted to be watching it, so no big deal there. But what we can see here with the volume, we've got some nice spikes, and that premium represents 160,000. With this being, kind of a big company following, actually, we'll see how big of a company it is, but, following 2020 and whatnot, 160,000, that's not really that much, for what I would expect for this. So good to consider that, but following that spike, we did see, an increase in the open interest. It's just steadily been going higher, and so that is something to consider. We do have the implied volatility. It is below 100%, but it is above 70. So, maybe it's good to be looking for a cool off with this one. So if we switch over to the chart, we can see, this is that channel that I was talking about. This was pointed out by Gareth Soloway. And so that's kind of why I've been watching this. And as you can see, I got alerts here at 32 and 30 cents. So I'm waiting for it to pull back to those levels, maybe testing the bottom of this channel. But, following watching this, it's gone up. Looks like a big wick to the upside. A rejection from this red line at $45, inverted hammer candle, then consolidating. So maybe this is a bull flag, quite possible, but maybe it is getting rejected there. Where is this level go back to? Old news, old history, 45. But yeah, it does look like we're consolidating below that, closing at 43.06. So I could see this either breaking out from this channel or pulling back. I'm just watching it. I don't plan on buying or anything until either these alerts go off or, just be happy for those who are holding if it goes long and it doesn't come down to 32. But let's look over at the data here. This is the $60 call expiring April 17th. And we can see that volume has actually picked up, a good amount as the underlying price has dipped lower. But we actually don't see anything going too crazy with calls or puts. This is a move in the puts. I think that's call put premiums. So that's negative. So some selling there, people going bullish, selling their puts. And so I think that this looks like it could keep going. I'm just not going to be chasing it. But it's useful to at least be tracking it here to just be learning, as I'm getting more comfortable with swinging these contracts. And so the next one is going to be NIO. That's ticker symbol NIO. This is the $8 call expiring June 20th. This is one that I have more aggressively been accumulating. I think I have 9 contracts. My average is 60 cents. I would add another contract at 30 cents. But maybe this is one that I want to consider adding at 35. We'll first look at the chart and stuff before I assess that, because this has been one that's, fairly disappointing. But some of the stuff that I have over here has really been giving me a little bit more confidence regarding Baba, because this is, I think, a retweet that I did of, Mr. Chart Norris, and he was talking about the daily candle for Baba, saying that this is the exact chart you should be trading. And so Baba is Chinese commerce, kind of like Amazon, but for China. And so if that is looking like it might be bottoming, I would think very similar things regarding NIO. So I'm actually going to maybe I'll wait to repost it until after getting through this. But what we can see, this gives me a lot of confidence that this spike that I've talked about before, open interest holding following that spike represented $250,000. Now we've seen some more little spikes, and that's more or less corresponded with it going up, but we have seen some little dips. And let's see, the IV is still below 100%, so I think that there's still some good opportunities with this. But let's look at the chart and then the data. And so here is the NEO chart. I put out a video here, still thinking that it's going to 8, or actually, and up here, thinking that it's going to 8. We pulled back, and I think it's just like classic game of, tricking retail here, unfortunately, and then up pulling back, forming a bear flag. Maybe this is a bear flag again. We have been putting in lower lows, so a little bit concerning there. So it's like why I'm not like super aggressive with buying this. Did close the week below $4.50, but maybe this is a falling wedge here, is what it looks like to me. So yeah, let's just doing this kind of rough, but yeah, we've got. I'll just make that a little bit thicker. And then over here, just being kind of arbitrary. Yeah, that looks like it could be a fallen wedge. So, I think that this is, get people to lose confidence here when it pulls back, starts to put in lower lows, makes people definitely lose confidence, sell at the bottom because they're wrong. But then they end up being wrong, selling at the bottom, and this breaks out of this falling wedge. So yeah, I am feeling good about this. Also, with it having the June expiration, it's not so bad. So I might place an order. Oops, well, I don't want to change the data there. I want to do this here, 35, and I will make that yellow. So I know to consider that. And before I go, actually, no, let's look at the data here. First, I'm actually just going to repost it because I feel good about this. Repost. Yeah. All right. And then contract lookup. So that NEO $8 call expiring June 20th, as you can see up there. And so we can see as the premium has been going lower, there's been more volume traded. It looks like calls and puts, lots of noise. And then if we look at that spreadsheet that I have, we can see that from, 4,740, just kind of, or I guess the high here before it started to go down, we are actually lower. So there has been net selling. So maybe that's a little bit bearish. I mean, that is a little bit bearish, yeah. But for me, I'd like to more aggressively be getting my average down because I think it will be breaking higher. I think that this is just like the waiting game, and that we all get kind of fatigued by and then end up losing money. So good to, have a plan. And, I'm feeling all right about this. Even though I'm about 50% down, that's fine. I can just get my average down. All right, and so the next one, this is the Plug Power, ticker symbol PLUG, $3 call expiring June 20th of 2025. This is one that looks like I've got 5 contracts on. Did trim at break even as well as 10%. So that's something to note there. My average is around 38 cents. The next level that I would trim at is 20%. And for this one, it does look like I have a couple buys, one placed at 35 cents, just because I trimmed at break even. So why not be a little bit more aggressive? And then also at 30 cents. And also, I think the reason why I do have 2 buys there is because I think the chart's just looking pretty good. So I wanted to go over that. And you can actually see it up here in the data with the underlying. It's like we got this big hump, a little bit of a spike that was a fake out, and then we continued down lower. But now it looks like we've broken out and holding, maybe forming a bull flag there. Perhaps that's looking good. It looks like the average 39 cents above my average. So I'm feeling happy about this so far. We can see spikes in volume over here, and with those spikes, we see that the open interest has been increasing, so that is looking good. But the highest spike is not even one YOLO on Wall Street Bets because that's less than $10,000. So take that with a grain of salt, all of this data here. But what we can see is, again, the IV is below 100%. So, it could be lower, but it could be much higher. And so I think that could be suggesting that we're going to be looking for some upside. And with that being said, let's look over at the chart. I did just do a video on Plug Power, so I'd encourage you to check that out. That was on Thursday when the market was closed on Thanksgiving. So between these two candles here, but what I talked about was, it looked like we were getting rejected from that purple line. Where do we close the week? We close the week above that line. I actually have some shares. My average is around 220. So I'm feeling a little bit more comfortable because I have those shares, but I have been selling covered calls with strikes of $3.50 and $3. So maybe I get pushed out of my position or parts of my position if we are, going to be going above 250 or 3. But, that's fine with me. I still would have some shares on the side that I'd be holding. So no worries there. But yeah, I think that this is looking really good, really strong. I think it's a nice way to close out the short week above that purple downtrend. And so I suspect $3 definitely on the table, looking pretty good there. If we look over at the data here, well, we can see, this is going to be, smaller positions being traded and whatnot. But as that premium has come down, we've seen, increases in volume and calls and puts, up and down around that 0 line. So nothing too exciting or unusual there. Coming back to the spreadsheet, we can see that, going back in time, kind of like, what I was just looking at with the NEO one, although that one, the open interest has gone down. We can see here, that over the past few weeks, over the past, month, since I started tracking this, going back to September 3rd, open interest has just increased. So I think that's good. I think this has been a great time to be accumulating. So yeah, I would definitely be dip buying if it came down a little bit lower than it was on Friday with that low of 37 cents. So yeah, feeling good about Plug. Even though I was a little bit concerned looking at the chart here with it getting rejected here and then downtrending here, came back to the level of 186. That's a level that stands out to me, not only because I have it marked here, but because I remember it from the earnings day, because I have it marked there. But yeah, so I think that was a great dip buying opportunity. I think this is going towards 3. So I'm feeling good about this call that expires in June. But anyways, the next one on the list is going to be Rivian. This is the $15 call. And I should know that's Rivian, ticker symbol RIVN. $15 call expiring June 20th. This is one that I have been taking profits on. As you can see, as of right now, I only have one contract, and I would plan to sell that at a 2x or 100% profit. I have made more than $100 selling this, trimming at 10, 20, and 30%. A little disappointing, I guess, that I trimmed at these levels over the past week. I did trim those two on the same day. Could have, made a little bit more money, but I, was happy to be trimming at 80%. And so I still have one contract at an average position price of $1.08. And so that 2x would be to 216, which we hit a high of $2 on Friday. So I'm still holding. I do have a buy placed at 108 just to add another contract if it comes back to my average. But, I might actually remove that one in favor of the other contracts that I, have marked as yellow, just because I think that this is one that, I don't want to fall in love with. And with Rivian, with this contract, I actually have some shares with this that I have been trimming as it goes up. But if I then get out of this position, the call, I would then just, maybe I'll trim the shares as it goes up, but I want to at least keep some of them. And so, yeah, good to have a plan there. What we can see here as the premium's been coming down, seeing it start to go up along with that underlying stock price. And over here, we can see big spikes in the volume here, which corresponds with over $1 million. And that was just about one position, I believe. The one position was a little over a little under $1 million. But still, that's a big trade. And following that, it looks like the spike over here, premium, it did dip a little bit. So dip buying opportunities, and then it has since rallied. And we do have the IV being less than 80. So maybe I don't want to fall in love. I'm thinking maybe I don't want to sell at 100%. But, that's just take that money and then move it into other positions. I don't want to be falling in love. I want to be taking profits. So looking at this, let's see. Let's look at the chart first. All right, Rivian over here. I think that this one actually could be pulling back. And the reason for that is I think I may have just recently drawn this. I'm not sure. But we have this, downtrend. And, following this pullback that we saw here, big wick to the top side. It looks like we got a nice little doji here. We opened at 1223, closed at 1223 on Friday. And so with that doji, with the big wick to the top side and also a big wick to the downside, it's kind of like a spinning top doji. It suggests indecision. But with price coming into this level, I think that we could be seeing a pullback, maybe coming down to $10.50, maybe $11 a share. And so with that, that could be an opportunity to add to my position. But that's also, like the lesson of why I don't want to hold for a 200% swing here. I'm just going to stick to the plan and get out at 100%, maybe buy back, but maybe buy back higher than 108 if I'm out by then, because I don't really think it's coming back to 108. But anyways, looking over at the data here, that Rivian $15 call, the June 20th expiration, as they all are. This is that one big candle that was, really stood out to me. If I hover over it, we can see the data from it. And so for that candle, we see the candle premium is over $1 million. But if we look on what was the no side, that was 10,000 contracts. And I think the fill for them, the average fill was $96. So if we multiply 96 times that no side, that was just under $1 million. But what we can see is, as the premium's been going up, we've been seeing these pretty big buys, and it looks like they kind of got the bottom there. The premium's been going up. See a lot more going on with the calls than puts, so that is looking good there. And I'm just excited about this. The company, the shares that I have, these contracts, just to be swinging for some money. So I'm feeling really good about them. But switching over to the next one here, looking at the Rumble, ticker symbol RUM, $15 call expiring June 20th of 2025. This one I may actually take off the list for next week just because I'm not in it. And, I don't really find Rumble, the company, to be that compelling as you are watching this on YouTube. I haven't had any censorship issues. And I also, watch Russell Brand on YouTube, not Rumble. So, I think that it's like also their coffee ventures. Also, I'm just not as compelled. And I'm more compelled by X than I am with Rumble as an alternative to YouTube. But anyways, enough rambling there. What we can see is the premium has gone up, but we kind of got like this double top here look in the stock price, but maybe there's like a bull flag there. Now we do have the volume spikes here. This is almost $500,000 on that spike. So looking good. This spike is around 300,000, so more than $250,000. So looking good again. Open interest has been stair-stepping up, so looking great there. Implied volatility, though, is a little high. So this is not one that I would be looking to establish a position in. But let's look over at the chart to see what's going on with it. So maybe this is a bull flag, but we got these big wicks to the top side. Also, the MACD, it looks, it's green. So maybe it switches over to going red. I could see this pulling back. Maybe there's an opportunity if it does pull back. That's kind of why I'm watching it. But yeah, I'm just not terribly compelled by Rumble. But we can look over at the data here. Maybe we see something compelling. We do see some, big spikes that, I kind of went over in Excel. And with that, premium's gone up. Missed it though. We do have kind of a mixed bag. Actually, more puts. It looks like more put volume than call volume, but they also seem like they were wrong with that. So, something to keep in mind. But this is one that, I don't really find too exciting. One that I am pretty excited about is SoFi. So I've got two puts here. I'll go over why I think price could be coming down, but this is also to be considering that this is for the June expiration. The first one is a little bit more ambitious. I think that this is the more risky one, but it's a lower dollar amount to risk. But I may actually take this off the table in favor of adding to my other positions. But this is the SoFi Technologies, ticker symbol SOFI, $10 put that expires in June. And so what we can see is that the premium's been coming down as price has been going up, which we can see in the green there. We do have these spikes in the volume, which corresponds with, spikes right around 60,000, less than 70,000. So nothing too crazy. A herd of 6 or 7 manatees munching on that seagrass. We got the open interest kind of steadily going up, but nothing too crazy. And we also have that IV, although, it is below 70. So maybe this is something appealing to establish a position. And also for me, just to get more familiar with puts, as you do notice, the graph here does look different than calls because you got price going the opposite direction of the contracts. And so actually I want to go over the chart first. And this, I was just like looking at this. I didn't really draw anything up. I'll actually pull it up in TradingView. I was just looking, man, this has gone up so high, but that does look like a spinning top closing the week. If we look at this on the weekly or the monthly, I think it looks less like it could be topping. So I could maybe see this going up to 18 or so, 1618 before pulling back. But I could see it pulling back to either 14 right around there or 10. And that is going to be based on, let's see, this chart that I have drawn up here. I posted this on X, so you can check it out there if you like. But I was just looking at the chart. This is on the weekly time scale. I was just kind of connecting, the highs over here. And it's like, oh, we kind of broke above that. This is the weekly, so we have one candle going above that, but maybe next week we pull back. It just seems like it's gone on, such a rampage. And I was initially actually drawing this, on the logarithmic y-axis. And so with that being said, that's kind of why I think that this could be going higher before we pull back. We also do have a much nicer touch point here that would be in August of 2022. And so I definitely think that there could be some resistance coming up if we're not already there. This is with the linear y-axis. And so, I could see from this retracement that I've drawn here going effectively from the low here up to the high that we saw last week, which maybe we blow past it. So maybe this Fibonacci is not that useful. But I was just thinking, with the golden pocket here, that's right around $10 a share. Maybe we could be pulling back to that. Or more conservatively, we got the 236 here. That's around 14. So that's another contract that I am considering. But if we do go look over at the $10 put, let's see, as the premium has been coming down, we have been seeing a little bit more volume traded on this and actually more going on with calls than puts as the stock price has been going up. But I think that we will be seeing a turnaround at some point, and that's why I'm interested in like the June expiration, not something coming up in the next couple months. And so, that is one that I'm interested in, but I think that $10 is much more risky than $14, which is the other strike that I'm considering for the put. This is the SoFi $14 put expiring again June 20th. And so with this, really just kind of like emphasizing that I think that we could be seeing a pullback before we start to a pullback in the put premium as the stock price does go a little bit higher, like looking at that log chart and seeing that we're not necessarily at that resistance just yet. The high from Friday was 180. It did get up as high as 213 over the past week. So I could see this pulling back some. We already have. Maybe this is the extent that we pull back to like the low of 174 on Friday. But, maybe this pulls back to $1. So that's $100 per contract. I'd be interested to buy there. I do have a limit order place, but I might actually adjust that so I could get my average down on the other ones that, I colored yellow. Looking at the data here, same stuff that we saw with the $10 put over here, volume at big spike here. That represents over 80,000, almost 90,000, whereas the other contract premium was, smaller traded. But with this, we also see a spike in the volume over here, and we see that open interest going up as well. So that gives me some confidence. Also, the implied volatility, that's actually, below 70. So looking pretty good, but maybe we start to see a pullback, and maybe I want to add if we do see that. But yeah, I'm just going to pull up the data over here, the $14 put that expires in June. And we actually have a good amount of volume the past couple weeks, but really just not that much data. So I think this one is, we're probably a little bit early, but just looking at the chart, I think that's probably going to be pulling back at some point. I think that 14 is a pretty reasonable strike, but I did also want to include the $10 one just to, have options. But then coming back to the table here, let's look at the next one. This is going to be SoundHound AI, ticker symbol SOUN. This is the $13 call expiring July 18th. Did put a video out on this, so you can check that out. And it looks like, I should actually add the video here. So let's go over to the website here, the YouTube studio. So SoundHound, this was on the 26th. So I am just going to, actually, I don't need to do it like that. I can just do it like this. And then get a shareable link. And so that shareable link, I'll post it here. And that's on the 26th. And that was, the 26th, I said. Yep. I'm not sure who did this first, him or me. I'm going to assume him, which is... By him, I mean Mr. Chart Norris. And so I'm just going to copy this and I guess insert. I'm not used to doing it like this. Copy. Can I just insert? Insert cut cells. There we go. Yep, so there. And actually, no, I didn't want to do that. I wanted to assume that he's first. So I'm just going to cut these, move them down like that. A little bit simpler. Overthinking. Excuse me. And so with this, I put out the video on the 26th over here when premium was around $1, $1.24 at the high. It's now gone up to as high as $2. So kind of missed it on this. Had the average of 184 that we can see here. And the price has gone up as well of the stock. And then looking at the spikes in the volume, I suspect this is going to be reflected in those holding with open interest going up, but maybe not, because with these spikes here in the past, we saw open interest coming down. So maybe there are people taking profits. Looking at the total premium here, this is over 160,000. Looks like it's about over 170,000. So a good amount of money there. And we have this implied volatility now at 100%. So maybe it's maybe a little too late, but wanted to be posting that. Yeah, because I think Mr. Chart Norris, actually, I think during the live stream, it was put on my radar. Mr. Chart Norris posted about it. Or maybe, I saw him post about it, and then I'm not really sure. And then I went over during a live stream. Then I made this video on it because it just looks really good, and it's already kind of played out. So timed well, but not timed appropriately for me to get involved with a trade. But yeah, so looking over here at SoundHound, I think I was just looking at this downtrend. And, got rejected here, and then a breakout retest, and now going higher. And that was a $13 call. Why did I pick $13? Let's think about that. I'm actually just going to adjust the y-axis here. Why did I pick 13? I think it probably, maybe if I go over to the weekly, 10 here, 13, I don't know why. Because I think I wanted to go higher, and I think maybe 13 was the maximum. because I would have probably done 20. So we have this measured move going up to around 20. 13 is the maximum strike. So that is why I had to go with that. But yeah, congrats to those who are holding this. For me, if I was holding this, I'd definitely be taking profits because I'd probably be at that 80% threshold following my table. But, I'm not holding it, so I don't got to worry about that. Speaking of one, though, that I am holding, this is the Tilray, ticker symbol TLRY, $2 call expiring June 20th. This is one that I have trimmed, took 10 and 20% profit on it. Not a lot of money there, but I do have, looks like 3 more contracts having, sold. I thought I bought back. Oh yeah, here, I sold at a 22, but then I bought back at 18. So feeling pretty good about that, having sold at the high and bought back at the average for that day. So it was a net contracts traded for me. It was 0 on that day. And yeah, so I've got the 3 more here. I would add at 14 and 12. And yeah, but I just plan on trimming at 80, 100, and 200%, which these are, my average is $18 per contract, 18 cents there. So, 100% swing, I'd be making 18 bucks, nothing crazy, but just getting more comfortable with contracts, whatnot. And so what we can see in the data here is we do have the stock price coming down in green there, also the premium coming down in blue. And with that, we see spikes in volume. These correspond with not even a high of 25,000. Looks like we have a maximum of 24.221 thousand. And, with that, in the volume traded, we do see the open interest going up. However, following this spike, we actually saw it pull back some. And we do have the implied volatility below 100, but definitely above 70, below 90 though. So maybe that's something to consider. But let's look over at the chart to see what's going on there. So this is the falling wedge that I had talked about. We broke below it. Lots of people bearish here, and that's the best time to be buying. And we are testing and kind of struggling to hold this downtrend here. Closed the week at 134, and so my level was like 142. But I haven't been buying shares. I've just been accumulating these contracts. Maybe what we're seeing here, though, is a move up, rejection, bullish consolidation, and then a break higher. So I could see those calls printing, but I could also see them coming down more. And so maybe I will be adding to them, which is why I have limit buys at 14 and 12 cents. But maybe I'd want to have one at 16 cents, but this is a little bit speculative, so I'm not going to get too aggressive with my buys. Don't want to be risking too much with it. But if we do look over at the data in unusual whales, and actually, I didn't really look at the SoundHound one, but anyways, I guess I'll skip that for the time being. Premium's going up as the volume's going up. So with Tilray, looking at that $2 call with the June 20th expiration, we see that the premium has been coming down. Volume as it's down has gone up, so looking good. The stock underlying has gone lower, but here what we can see is we're putting in a higher low, it looks like. And so let's look back at the chart here. That is a higher low, so that's looking good, but maybe it continues lower, so we haven't necessarily put in that low just yet. And so coming back to this, let's see. Yeah, I think I kind of went over, my thesis on that. And so the next one, this is going to be the Unity software call. This is a $30 strike that expires June 20th. I had been covering another one that expired a little bit sooner, but I wanted to push the date out. I did swing that one for a small profit. I had actually gotten in too early on it and, actually started trimming shortly after the bottom was in, taking profits, but lowering that risk, And with this, let's see, I just started tracking this one at the beginning of November, but I do have data going back to September because of the other call I was tracking. And we can see that We did go up in the stock price, consolidated, then broke down, now up. Are we going to consolidate here? Maybe as we do consolidate, maybe that premium starts to go down, or maybe we're forming a bull flag in that premium. Again, something to consider. Volume, we do have these spikes over here, which correspond with this one actually being the maximum of nearly $250,000 or $250,000. Here looking like 243,588 being traded on that day. We also do have open interest with those spikes actually coming down. So that's not really looking so great. People are taking profits, or were taking profits when it was up. Look at that total premium, those spikes there, and then that applied volatility again being below 70. So not looking too bad. But let's look over at the chart. This is one that I've been tracking for quite some time. And so, I just really like this stock. But yeah, maybe we start to pull back and maybe come back to the highs over here. That would be around maybe like $22. Maybe that's a dip buy opportunity. Or, I've done this retracement. The 50% level is at 2109. So maybe we see a little bit of a cool off here, retest this as support, and then go higher. So I could see that, but let's look over at the data with these $30 calls that expire in June of next year. And so we have, the premium bouncing a little bit here, going up higher. We got more volume traded here, and looks like, there were a lot of calls that were sold here, calls and puts, waxing, waning around zero, so nothing standing out too much there. But then just coming back to this, if this were to pull back, where might be, a good dip buy level? And I could see it coming back to like $200 per contract, which is $2 per contract. So, I don't have an order placed on this, but that's something that I would want to consider, and I'll have to reassess that later because I'm not going to put anything here that would suggest. Actually, yeah, maybe I'll do that, and I'll just, color it yellow, so I know that's one that I'm considering, but not too seriously, just because it's $200 to be put on the table there, and I probably want to use that for something else. That's a little bit risky here, although IV is pretty low, so maybe it's not that risky. And then the last one on the list is the volatility index, the VIX, or the VIX, ticker symbol VIX, which is the $25 call, and this is expiring February 19th of next year. What we can see is premium as well as the ETF price has come down. We do see some notable spikes in volume over here, which corresponds with here $3 million, and over here over $1.5 million. So a lot of money there. We do see open interest corresponding with these spikes going up. So betting that there's going to be some volatility in the markets. Maybe we see a gap down or something like we saw on August 5th. And then the IV is now up above 100%. So the implied volatility of the volatility index is getting a little bit spicy. But if we look over at the chart, I haven't actually done too much on this, but we are kind of below this downtrending level that, where does that, I think that actually goes back pretty far in time to, I think going back to like 2020, maybe I switch over to, yes, this is the high that we saw in January of 2022. And yes, we've just been, testing, that, getting rejected from that. But more recently, we've broken above it, now kind of holding that as support, so maybe the bottom's in there. But really my analysis of the VIX really just comes in when looking at the UVIX, which I did just do a video on it recently, where, there's like 2 weeks to the downside, 2 weeks to the upside, kind of like rinse and repeat type of scenario. But we then did break below this uptrend. And so maybe it's kind of a regime shift. I have a position in the UVIX. I was planning on trimming, right around here at 466. I think now it's more for a 10% swing for me. It's around 450. But we are, at the base of this green box. So, it didn't get up to test the base of that as I was kind of hoping. But, I think that we will see a spike in some volatility at some point. So just kind of like a nice way to hedge and to be trading around that. But then looking over at the data here for the volatility index over the past month, we see that premium has come down. There's been some days of a lot of volume traded, and it's just been a mix of calls and puts. So kind of, nothing very clear signal, not a very clear signal there. So yeah, I mean, we'll have to see what happens with this, but that is the last one on the list. So I'm just going to click all of these tabs over, and we can see here coming back to the home screen. And so I'm just going to end the video on that. It's been about 2 hours and a little over 15 minutes. But if you did enjoy this content, please make sure you like it. And if you do want to see weekly updates like this, make sure you subscribe. I do put these options, theses videos out every week on Saturday. And also, as I should note, I will throw this up again just because it's my habit. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching. Hopefully you're having a great holiday weekend if you're in the US, and if not, hopefully you're having a great weekend. Take care, you guys.